managers. I've had the actually privilege of interviewing many fund managers over the past few years. This is an attempt to revisit those interviews and start a new series called Kal Aaj or Kal. The objective of this is very simple. Investing becomes much easier when we understand three things: what happened in the past, what was said yesterday, where we stand today, Aaj, and what lies ahead, Kal again. Today we will revisit one of the most debated investment themes of 24-25, namely small cap funds, and more importantly, we will compare it with what was being said in December 2023 with what has actually happened and transpired from then to July 2026. Before we begin, let's quickly understand the classification of what is small caps, large caps and mid caps. SEBI classifies companies based on market capitalizations. The top 100 companies based on market capitalizations are large caps. 101 to 250th company in terms of market capitalization is mid caps, and rest beyond 250 are all small caps. These are businesses that are generally earlier in their growth journey. Naturally, they will be volatile, but if selected well, they can become the future mid caps and large caps. Let's go back in December 2023. Markets were already getting cautious as far as valuations were concerned for small caps and mid caps. Yet, during my interview with Motilal Oswal, mutual fund manager Ajay Khandelwal, who was going to manage the NFO of small cap fund of Motilal Oswal, one important point stood out. Their conviction wasn't based on momentum, it was based on expected earnings growth, their capability of selecting the right stocks with earnings potential rather than just going on the valuation of the general index. Earnings expectations that back then for small cap universe was supposed to rise from 507 rupees per share to nearly 893 over the next couple of years. The entire investment thesis was based on one assumption: earnings would catch up with valuations. What actually happened? Reality turned out to be quite different. Prices continued to rise, but earnings largely remained flat or negative. Between January 24 and July 26, the small cap index appreciated almost 28%. However, earnings actually declined slightly. As a result, valuations became much more expensive. This tells us an important lesson. Sometimes markets run much ahead of the fundamentals. What was the industry view during this period from 24 to 26? Naturally, many fund managers and even the regulators started expressing caution. Throughout 24-25, we repeatedly heard advice of avoiding small caps, getting out of it lock, stock and barrel and reduce exposure. Valuations had become stretched, which was a reality. But what was Motilal Oswal's stance? Interestingly, Motilal Oswal did not abandon the segment. Their approach changed. Instead of buying the index, they continued focusing on businesses where earnings visibility remained strong, and their conviction shifted from segment to individual stock selection. Where are we today? Fast forward to July 2026, today's picture looks very different from what it did 18 months ago. Portfolio earnings. The portfolio companies inside Motilal Oswal Small Cap Fund have reported robust earnings growth. Earnings growth is consistently around 30%. At the same time, portfolio valuations have moderated in terms of price to earning, and the PEG ratio has also improved considerably. This is exactly what investors like to see, and improving fundamentals supporting valuations. Companies graduating also. In that portfolio of 22 odd companies, perhaps the strongest evidence of successful stock selection is how many companies have graduated from small caps to mid caps and large caps. Since December 2023, 22 companies in the portfolio of Motilal Oswal Small Cap moved from small cap classification into mid cap or even large caps. That is the very objective of investing in quality small caps, the future mid caps and future large caps. Finding tomorrow's leaders before they become household names. That is the crux of the investments thesis in small caps, and that is what was captured by Motilal Oswal in their portfolio construction. Also, the market cap growth. Interestingly, India's market itself has become much larger. The average size of large caps has grown from 1,18,000 crores in 2020 to 2,75,000 crores in 2026. Mid caps have grown from 16,500 crores to 62,500 crores on an average market capitalization, and small caps have grown from 2,200 crores to 10,000 crores on an average, which is 250th to 1000th number in terms of market capitalization. If we grow from 250 to 500 only, the average market capitalization has grown even further. So today's small cap companies are far larger companies than they were a few years ago. What was the change in the industry perception and industry view during this period? Notice another important major shift in fact. Many wealth managers who were avoiding small caps a year ago have started gradually recommending small caps and exiting out of large caps. Similarly, many flows which were stopped into the small cap schemes by the fund houses, they have resumed investing and taking money, fresh inflows into their own small cap funds also, which shows that improved comfort levels regarding valuations in the small cap space. If you see the performance comparison of small caps from the launch of Motilal Oswal small cap fund, it's an amazing track record which they have created over a short period of time. Since inception, Motilal Oswal small cap fund has consistently remained among the top performing funds in its category. In fact, by July 2026, it ranks first among peers since launch. This suggests that disciplined stock selection has added a meaningful value in their performance. What lies ahead? Kal, tomorrow. Now comes the most important question. What should investors expect going forward? This was so far the story which was till July 2026 from December 2023. What lies ahead for the investors? As per Bloomberg estimates, earnings growth over the next 2 financial years is expected to remain strongest in the small cap universe. Large caps are expected to grow around 13%, mid caps are likely to grow around 16%, while small caps could grow around 26%. Of course, these are only estimates, but they explain why many fund managers continue finding opportunities in this segment. Also, analyst coverage is the least as far as small caps segment is concerned. Small caps continue to remain relatively under-researched. Fewer analysts cover these companies, and that creates opportunities for active fund managers with a strong research capabilities. Also, diversification is extremely important, which is not captured in the large cap space. Small cap portfolios also provide exposure to sectors that are underrepresented in large cap space. Large cap indices remain heavily concentrated in banking, financial and IT. As far as small caps are concerned, they provide a much broader participation across India's economic growth. And fortunately for Motilal Oswal, they match the house themes of Motilal Oswal as well. To summarize, so what have we learned? First, don't invest based purely on market sentiment. Focus on earnings growth. Second, good active management matters far more in small caps than in large caps. Third, global liquidity remains an important risk. If global markets correct sharply, India is also likely to experience volatility. India will not be isolated at that point in time. But finally, if global capital gradually shifts away from expensive AI play, which is cracking currently across the globe, emerging markets like India, which with a broad-based market participation, continue to attract more investors and will continue to attract more investors going forward. I hope you've enjoyed this analysis of Kal Aaj or Kal. Do give your feedback so that it helps me to come up with more such ideas. I will cover many such NFOs which we had covered during the past few years and come up with an analysis like this. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.